What's up? What's up? What's up, my mind your money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. And as always, hopefully you guys are investing. That's the most important thing. I'm sorry, my camera is a little off. I just leave it alone. Hopefully you guys are investing. You're doing something. You're making money in your sleep, right? You're investing in these assets that are appreciating over time and not things that are depreciating, like cars, clothes, trips, things that you cannot get a return back on, right? But these stocks, real estate, gold, Bitcoin, even putting your money in those type of assets that go up in value is the way to go. You know, you don't have to try to create a company to make money because a lot of companies fail, right? Why not invest into these companies and ride their wave? You know, some of these owners of these creations are willing to ruin relationships, steamroll people, say things, work 24/7 to create these billion-dollar, trillion-dollar companies. So why not invest in them and ride their wave like many of us are doing, instead of you trying to figure out how to create your own? But if you do have a great idea, execute it. And those of us that don't, invest, right? So let's see what happened in the news today. But I just wanted to say that, you know, because investing is very important and things are changing at a very fast rate these days, right? With this technology, AI revolution, things are changing very quickly. And if you're not investing, you know, if you're reading the headlines and if you're paying attention to the news, it will deter you, in my opinion, on purpose, from investing. If everyone invested, there probably wouldn't be as many problems out there that people have, especially with other people, because you'd be more focused on yourself and what you're doing, in my opinion, and not give so much energy towards others that may say something or do something that you don't like. Either way, so let's see what the market did today. It says the S&P 500, Dow, NASDAQ slide after Powell flags Fed's change highly valued stocks. So what does that mean? So it says U.S. stocks fell on Tuesday, pulling back from a record-setting streak, as Fed Chair Jerome Powell signaled the central bank would proceed cautiously on further rate cuts and suggested equities were fairly highly valued. The Dow Jones Industrial Average fell 0.2%. The S&P 500 fell 0.6%, and the tech-heavy NASDAQ lost 1%. It looks like everything that was gained on yesterday was wiped out today. Hey, that's the stock market. Here today, gone tomorrow, right? But over time, you will make money. So stock jumped on Monday to clinch a third straight day of record high closes, lifted by optimism that the AI trade and further Fed policy easing will continue to fuel the rally. The NASDAQ laying the gains as Nvidia stocks surged after the chipmaker said it would invest at least $100 billion to OpenAI. And if I'm not mistaken, I believe Microsoft owns a big stake in OpenAI. So hopefully you are invested in Microsoft, or you're investing into the S&P 500, which Microsoft is a part of. But Powell's caution on Tuesday threw cold water on the rally on a couple different fronts. Powell suggested during a speech in Rhode Island that the central bank would move cautiously after resuming rate cuts last week, noting the challenge of balancing its dual mandate at the moment. Like, you didn't have to say that, Powell, but it was said. Anyway, near-term risks to inflation are titled to the upside and risk to employment to the downside, a challenging situation. Two-sided risk means that there is no risk-free path, Powell said. So later in a question and answer session, he noted by many measures, for example, equity prices are fairly highly valued. Powell comments set the stage for the release on Friday of the Fed's preferred inflation gauge, the Personal Consumption Expenditure Index. Wall Street will look for signs that already sticky inflation isn't heating up, which could dent high expectations of 2 more rate reductions this year. Other data released Tuesday showed that U.S. business activity cooled this month, while a measure of prices paid for materials jumped. Prices are going up, right? Indicating price pressures are persisting. So on the tech side, the spotlight is on Micron Technology's quarterly earnings due after the bell. The memory chip maker results will be watched for updates on AI-driven demand and revenue guidance, with analysts expecting an almost 40% jump in sales. And that's it. So what happened? So Nvidia today, let's see what happened with some of these stocks. Nvidia today lost $5.18 today, closing out at $178.43. That sucks. Palantir gained $3.22. Okay, closing out at $182.55. Tesla lost $8.36, closing out at $425.85. FTEC, Information Technology ETF, an exchange-traded fund that consists of over 200 information technology companies, lost $2.21 today, closing out at $221.64. SPLG, the S&P 500 ETF, consisting of the 500 largest companies in the U.S., lost 42 cents. Gotta love the S&P 500. Small losses. Still a loss. But it lost 42 cents today, closing out at $78.26. And that's pretty much it for the stock market and what happened today, and a few stocks that lost some money and a couple that might have gained some. But again, people, you need to invest. Times are changing. They're not like what they used to be. You can do more if you want more. You can invest if you want to invest. However, if you're in a lot of debt, that might be a problem. Or not might be a problem. That is a problem. So you need to get out of debt. You need to get out of the car loan debt. You need to get out of the credit card debt. You need to get out of the personal loan debt. You need to get out of the student loan debt. Debt hinders you from investing. Moving forward, if you are in a ton of debt, more people are in debt now than ever before. I don't even know the numbers. Google it, because there's a ton of people in debt. I listen to different podcasts, and I continue to hear about how much debt people are in. So you need to get out of debt. But in order to get out of debt, you need to create a plan. And that plan is called a budget. So you can start telling your money where to go. So you need to get out of debt. And so I'm going to just, I always tell you how you can get out of debt. You start subtracting, your bills out of the money that you have coming in. If you have more going out than you have coming in, that's a problem. You may need to, or not may need to, you need to seek other employment where you could earn more money. You need to start a second or third job to get out of debt. I follow the Dave Ramsey plan, where you stop all your investments so you can get out of credit card, student loan, personal loan debt. Stop all investments and start throwing all of your money towards the debt. You list your debt from smallest to largest, and you pay off the smallest one, and you keep rolling that snowball down the hill, and start tackling the bigger ones. And the ball gets bigger, the snowball gets bigger and bigger, more money to throw at these larger debts until you're paid off. And then once the debt is paid off, now you can start investing back into your retirement fund. Also, you need to create $1,000 emergency fund when you start paying off your debt. So that means deplete your account. If you have $10,000 in your bank account, you take $9,000 and you start paying off your debt, and you leave $1,000 in as an emergency fund. Once your debt is paid off, the student loan, car loan, personal loan, credit card, start investing 15% of your income into retirement. Now you need to create a 3 to 6 months emergency fund. And you can also invest into your kids' college fund, at 529 plan. And then if you have a home, you can now start to tackle your home. Your home should be the last thing that you tackle. While you're putting extra money towards all that other debt, you just continue to pay your normal house, mortgage payment. Now, let's say you're out of debt and you don't have a home. Save up 20%, put it down on that home, finance for 15 years, boom. Now that you've been so aggressive paying off debt, that 15-year mortgage, you probably pay it off in 5 to 7 years. I personally was out of debt and I paid off my mortgage in 27 months and 19 days. Yep, I did it. All right, so I'm going to end this video here. So like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. And just remember, any and all information on my channel just depicts my opinion on, you know, how you can get out of debt, and also investing. You know, however, if you're not cool with investing your own money, please consult with a financial advisor and have them invest on your behalf, right? So yeah, I'm going to end this video. So you guys take care. Have a blessed day. Peace. Oh, like, comment, subscribe.